In business, the main transactions are purchases of goods and services from suppliers and sales of goods and services to customers. There are two ways that a business can make a purchase or a sale. Firstly, on cash, or secondly, on credit. If it's a cash purchase, it means that a business buys now and pays now. As it is a cash payment, it is recorded in the cash payments journal. If it's a cash sale, it means that a business sells now and receives cash now. As this is a cash receipt for the business, we record this transaction in the cash receipts journal. As mentioned earlier, another way for making a purchase other than cash is on credit. This means that the business buys now but pays later. In this video, we'll be looking at how we record credit purchases in the purchases journal. On the other hand, if it's a credit sale, it means that the business sells now but receives cash later. Credit sales will be recorded in the sales journal. A purchase invoice is used to verify credit purchases, whereas sales invoice is used to verify credit sales. Now that we have the source documents, what are we going to do with them? In our recording stage, which is the focus of this video, we're going to record credit transactions in the purchases journal and sales journal. First, we're going to look at recording credit purchases in the purchases journal. When a business makes a purchase from a supplier, it can either make a purchase with cash or on credit. We've already looked at cash purchases in our previous video. In this video, we'll be focusing on credit purchases, which means buy now, pay later. When a business purchases on credit from the supplier, it means that the business will owe the supplier for the goods or services purchased. The supplier then becomes the accounts payable to the business. We record credit purchases in the purchases journal, which looks something like this. In the first column, we record the date of transaction, followed by the name of the accounts payable, or in other words, the name of the supplier whom we owe. In this other column, we record the invoice number. Then here in the inventory of materials column, this is where we record the cost of inventory purchased, and here we record the amount without GST. In the GST column, we record the GST amounts on the purchases. And lastly, in the total accounts payable column, this is where we record the total amount owing to the accounts payable as a result of the credit purchase. Now we're going to record the credit purchase using an example. Big Boss is a personal training business. We're going to record the transactions that have occurred in April. On the 5th of April, the business purchased 250 protein bars on credit from ProBars for the total of $550 including GST. First, we record the date. Then, we write the accounts payable name, followed by the invoice number. The total amount owing to the accounts payable of $550 is recorded in the total accounts payable column. Here's a quick reminder on how to calculate GST on purchase. As we are given the amount including GST, which was $550 including GST, to calculate the GST, we take the $550 divided by 11 to give us a GST amount of $50. Remember that this is a GST on purchase, and therefore this is a refundable amount from the ATO. Then we record the GST amount of $50 in the GST column. In the inventory column, we record the purchase using the amount excluding GST. In this case, it works out to be $500. To work out this amount, we take the total amount owing to the accounts payable of $550 minus the GST of $50 to give us the cost of inventory without GST of $500. So remember, amounts without GST in the inventory column, GST amounts in the GST column, and amounts with GST in the total accounts payable column. Another credit purchase was made from Super Shakes in the month, which has already been recorded below. Assuming no other credit purchases were made in April, we are now going to total the amounts in the purchases journal. In the inventory column, we have a total purchase of inventory of $850. Remember, this is the amount without GST. The total amount in the GST column is $85, which is the GST on all purchases for the month. In the last column, the total amount owing to all accounts payable is $935. Now let us have a look at the effects on the accounting equation for a purchase of inventory on credit. On the 5th of April, the business purchased protein bars on credit from ProBars for the total of $550 including GST. Firstly, we have an increase in assets by $500 because of a purchase of inventory, which is a current asset to the business. Note that this amount of $500 is the cost of the inventory without GST. Next, we have a decrease in liabilities by $50 because of the decrease in GST payable to the ATO. Remember, as this is a GST on a purchase of inventory, it is refundable from the ATO. Therefore, this reduces the GST liability to the ATO. We also recognize an increase in liabilities by $550 because we now owe the accounts payable more money. Payment to accounts payable means that the business is paying the accounts payable, that is our supplier, for an amount owed. Here are some of the source documents that may be used to verify payments to accounts payable. The first one is checkbut, and the other one is EFT document to verify internet banking payments. Let's have a look at an example here. On the 8th of April, a payment was made to ProBars for an amount owing. Note, a purchase was made on the 5th of April, totaling to $550. No other amounts were owing. As this was a cash payment, this transaction is recorded in the cash payments journal. We start with the date, followed by the details, which is payment to accounts payable ProBars, and then we record the document ID. In the bank column, we record $550, which is the total amount paid to ProBars. Then we also record $550 in the accounts payable column to show that this relates to a payment to accounts payable. Within a period, for example, a month, a business may make multiple credit purchases from the suppliers, as well as make multiple payments to suppliers for the amounts owed. Therefore, it's important for us to know how to work out the total amount owing to suppliers. To do that, to calculate the total amount owing, we take any amount owing at the start of the period, add any additional credit purchases, less any payments made to suppliers. The following is some additional information that's given to us. The following is a list of accounts payable as at 1st of April. At the start of April, we owed Super Shakes $825. On the 10th of April, another credit purchase was made from Super Shakes for the total amount of $385, including GST. On the 12th of April, a payment was made to Super Shakes for the total amount owing. So the question here is, how much is the total amount owing to Super Shakes? In this case, the total amount owing is worked out by taking the amount owing at the start, which was $825, plus the credit purchase that was made on the 10th of April, totaling to $385. Because there were no other payments that were made to Super Shakes during this period, this is the amount that we are owing to Super Shakes in total, which is $1,210. So there we have it. On the 12th of April, a payment was made to Super Shakes for the total amount owing, and we've worked it out to be $1,210. As this is a cash payment, we record this transaction in the cash payments journal. So here we go. On the 12th of April, we write in the details as a payment to accounts payable Super Shakes. The document ID is check 58. And the total amount paid out of the bank account was $1,210. And as this was a payment for the amount owing to accounts payable, we record the $1,210 in the accounts payable column. Now we're also going to look at the effects of the transaction on the accounting equation. On the 12th of April, the payment was made to Super Shakes for the total amount owing $1,210. So we know that this amount is being paid out of the bank account, and therefore, because the bank account is an asset to our business, we have a decrease in assets by $1,210 due to the decrease in bank balance. Also, because we are making a payment to Super Shakes, who is our accounts payable, we previously owed them the amount, but by making this payment to them, we now don't owe them anymore. Therefore, this is a decrease in liabilities by $1,210 due to the payment made to the accounts payable. Now we're going to look at recording credit sales. When a business sells goods or services to a customer, it can either make a cash sale or credit sale. As we've already discussed cash sales in our previous video, our focus here will be on credit sales, and that is sell now but receive cash from the customer later. In this case, the customer will owe the business as a result of this credit sale. In other words, the customer now becomes the accounts receivable to the business. We record credit sales in a sales journal, which looks something like this. In the first column, we record the date of transaction. In the next column, we record the name of the accounts receivable, that is the customer that owes the business. In this next column, we record the invoice number. Under fees, here is where we record the service fees or sales amount, which is the amount without GST. In the GST column, we record the GST amount on the fees or sales. And in the last column, here is where we record the total amount owing from the accounts receivable. So this amount includes the GST. Now let us have a look at an example here. On the 9th of April, the business provided personal training services for 6 employees of HiCup, totaling to $950 plus GST. We know that this is a credit transaction because we are given a source document reference number, that is an invoice number. And invoices are usually used to verify credit transactions. We're going to record this credit sale in the sales journal. We start by recording the date, followed by the name of the accounts receivable, that is HiCup, and the invoice number. In the fees column, we record the amount of the fees without GST, and that is $950. In the GST column, we record the GST amount of $95. Here's a quick reminder on how we calculate GST amount. The GST is calculated by taking 10% multiplied by the amount without GST, that is $950, and this gives us a GST amount of $95. As this is a GST on sale, it is a GST payable to the ATO. In the total accounts receivable column, we record the total amount charged to the customer, including GST. Therefore, the total amount of $1,045 is receivable from HiCup. Now we're going to look at another transaction, and this time we are selling 60 protein bars for $240 plus GST on credit to Some Steps. We know that this is a credit transaction because we are given a source document reference number, that is an invoice, and invoices are used to verify credit transactions. So we're going to record this credit sale in the sales journal, starting with the date, followed by the name of the accounts receivable, Some Steps, and the invoice number. In the fees column, we can also use this to record the sales amount, and this is the amount without GST. This works out to be $240. The GST amount is $24, and we work this out by taking 10% multiplied by $240 to give us a GST amount of $24. Now this is a GST on sale, and therefore this is a GST payable to the ATO. In the total accounts receivable column, we record the total amount charged to the customer, including GST. Therefore, the total amount of $264 is receivable from our accounts receivable, Some Steps. Now we're going to look at the effects of a transaction on the accounting equation. On the 9th of April, the business provided personal training services for 6 employees of HiCup, totaling to $950 plus GST. Now this time here, I'm going to start with the $950 fees from these personal training services provided. Now these fees are revenue to the business, and this will lead to an increase in owner's equity. Here's a quick reminder on how revenue links to owner's equity. When revenue goes up, profits go up, and therefore owner's equity goes up. Next, we're going to look at GST and how this affects the accounting equation. In this case, the GST of $95 will lead to an increase in liabilities. Why? Because this is a GST on a sale, and therefore it is a payable amount to the ATO. Therefore, this increases GST liability to the ATO. Next, because we know that this is a credit transaction, we know that HiCup, our customer, has now become our accounts receivable because HiCup owes us. And therefore, this leads to an increase in assets by $1,045 as a result of recognizing HiCup as our accounts receivable. There's another transaction on the 10th of April when the business sold 60 protein bars. Now this transaction will not be covered in this unit, but will only be covered in Unit 2 onwards when we are learning more about trading businesses. Receipt from accounts receivable means that the business is receiving cash from an accounts receivable for amounts owed. Here's an example. On the 13th of April, the business received payment from HiCup for amount owing. Note that the sale was made on the 9th of April, totaling to $1,045. No other amounts were owing. As this was a cash receipt, the transaction is recorded in the cash receipts journal. We start with the date, followed by the details of the transaction, basically outlining who we're receiving this money from. In this case, it is HiCup. We record the receipt number, and in the bank column, we record the total amount received from HiCup. Then we write this same amount of $1,045 in the accounts receivable column, because we are receiving this money from an accounts receivable. Here's how we calculate the total amount owed by customers. First, we take the amount owed at the start, plus any additional credit sales in the period, less receipts from accounts receivable. Here's an example. The following additional information is given. Here's a list of accounts receivable at the start of April. We are told that the accounts receivable sum steps owed the business $440 at the start. This means from the perspective of the business, we are expecting to receive this amount of $440 from sum steps at some point in the near future. On the 10th of April, another credit sale was made to some steps for the total amount of $264, including GST. On the 15th of April, some steps paid the balance owing on account. The question is, how much was owed? The total amount owed can be calculated by taking $440 owed at the start plus $264 from the credit sale on the 10th of April, and because there were no amounts received from some steps to reduce the balance owed, our total amount owed from some steps is $704. In this example here, I would like to highlight to you some things. Firstly, on the 15th of April, it says here that some steps paid. But remember, this is not actually a cash payment for the business. Instead, we know that some steps is our accounts receivable, therefore, we are actually receiving money from some steps. Next, every time we see a payment of balance owing on account, this simply means that we need to calculate the total amount owing or owed to date. Lastly, be careful when we are adding the total amount owed from a credit sale. In this case here, we need to use the total amount including GST because this is the amount that we are expecting to receive from the customer. Here's how we record the amount paid from some steps. So on the 15th of April, the business received full balance owing from some steps. Because this is a cash receipt, we therefore record this transaction in the cash receipts journal, starting with the date, followed by the details of the transaction and the document number. In the bank column, we record the total amount received, which was $704. And because we're receiving it from an accounts receivable, some steps, we therefore record the $704 in the accounts receivable column. Let's also have a look at the effects of the transaction on the accounting equation. On the 15th of April, the business received full balance owing from some steps, totaling to $704. Firstly, there's an increase in assets by $704 because of the increase in bank balance. There is also a decrease in assets by $704 because our accounts receivable now owes us less.